Hey everybody, I'm Aaron Norris. It is Friday, March 27th, and this is the Norris Group's Real Estate Headline Roundup in 2. The National Association of Realtors reported a 1.2% increase in existing home sales last month, while prices increased at their fastest rate in a year. Foreclosure decreased in February after 13 months of increases. New home sales increased by almost 25 whopping percent last month to 539,000. And mortgage rates decreased with 30-year rates at 3.69% and 15-year at 2.97%. A New York Fed report says GSE reform is not on track and a huge opportunity to wind down Freddie and Fannie could be missed. Plan to develop a plan to see the end of the GSEs, as we know it dates back to 2011, from the Treasury and HUD, but none has really taken hold. One congresswoman just recently introduced a bill saying all profits from the GSEs could be put into a reserve until that plan is put in place. Perhaps this might put a little bit of fire and urgency back into the conversation, but some think this might not even be addressed for another couple years. The National Association of Home Builders released a report citing a lack of labor as causing a drag on the home building industry. Over 2/3 of those who took the NAHB survey cited that the lack of labor was their main concern, followed by prices of building materials and the availability of lots. Only 13% believed that labor was an issue back in 2011. More specifically, builders are really concerned about a shortage in finishing carpenters, framers, and masons. Rising rents might be pushing those stubborn millennials off the home buying fence. Finally, geez. The National Association of Realtors reported millennials made up 32% of the U.S. housing market, up from 28% in 2012, and have now surpassed Gen X as the largest segment of buyers. Chief economist of Zillow, Jed Kolko, unfortunately says that growth might be a little bit more slow than we would hope as millennials deal with things like school debt, access to down payments, and perhaps postponing until they have families. But perhaps creative financing and low-down programs might help get them off the fence a little bit sooner. Only time will tell. Home prices increased, but were below expectations at only 0.3%. According to RealtyTrack, home prices are actually increasing faster than income in 70% of major U.S. markets. Going by data from the last 2 years, home appreciation is at 17.31%, while wages have increased by only 1.3%. In only 44 out of 184 metropolitan areas was wage growth actually better than home price appreciation, and of course, California is one of the worst. That's it for the headlines this week, but you can check out many more on our website at thenorrisgroup.com/blog. If you're on YouTube, Facebook, tweet us. What did we miss? Let us know. We'll add it to that next session or to our blog. Up on the radio show this week, we have our second interview with Sean O'Toole, a longtime favorite. He doesn't always agree with what Bruce Norris has to say about market timing, and I love hearing them hash it out. May 3rd, we're going to be back on the speaking track doing Women in DS conference. That's going to be out in Orange County. May 5th through the 7th, we will be in Riverside doing the Norris Group's Property-Buying Bootcamp. If you're interested in that, give us a call, 951-780-5856, and speak with Diana. May 6th, we're going to be at the Inland Valley Association of Realtors doing a real estate market update. For more information on all of the events or our hard money programs, including fix and flip, buy and hold, and new construction lending, check out thenorrisgroup.com. If you're want more information on trust deed investing, check out tngtrustdeeds.com. And with that, have a fantastic weekend, and we'll see you next week.